So real quick, this was the longer term chart that I published right before the breakout, actually. And yeah, thing of beauty. So we broke out 1920, huge level, okay? A couple reasons why. One, it's the high back here from June of 2021. Two, it's actually the 2011 high. Three, it's the 618 decline from the high back here in August of 2020. And that brings me back to something interesting here as well. So like, look, gold broke out. I'm bullish, okay? I've been long gold for a couple months here. It's worked out great. I would love it if it just continued to go up and up and up. However, I realize that is, there's always a possibility that doesn't. So, be aware of levels where things might change. Okay, and one of those levels is the 618 of the range or the decline from its all-time high. And just like back in 2011, that's where we failed, right, for the most part. So, am I saying that's going to happen right here? I have no idea. But my point is, if there is trouble in gold world, if we are going to fail, right, and if we're not going back to all-time highs, then a very likely place for us to fail is 1920-ish. That's all. So, yeah, pay close attention. Okay, in the meantime, oh, by the way, it's also the channel here goes back to this low from September. In the meantime, 1877 and 1854, high here, centerline here, are going to be levels that you should pay attention to for support. And man, we had a good one this week. So this is gold, and look at the center, look at the channel, look at the center line. It was resistance. We pulled back. Remember that little shakeout on Tuesday? Look where we reversed higher from. I mean, beauty. And yeah, we had that in our update on Monday, the day before it happened, right? Right here. Rip. Wrote, if price pulls back, support should be 1842, 1847. We pulled back, and the low was 1840, 460. Okay? My point is not trying to just, say, wow, this analysis is totally awesome. What I'm trying to tell you is that these are repeatable behaviors in a market as far as breaking through center lines and pulling back to them, right? And it's a solid way to kind of trade breakouts. Look, there will be times when a market breaks out and never pulls back, and it just goes and goes and goes, right? Those are rare, but they happen. More often than not, you will see a market break out, shake out, and the shakeout tends to end at either the center line of a channel or the median line of a fork, or the center line of a fork, whatever you want to call it. Center line and median lines are the same thing. Okay, so again, they happen all the time on all different time frames. So it's just it's a very useful setup, and it's a very good description, I would say, of market behavior. Okay, it's just a good time for a couple announcements actually. So one. We are looking for profitable traders at Scandinavian capital markets. Okay, so we have launched a new version of our prop trading program, and we're funding up to $1 million to traders, given that you pass our assessment. Okay, so no monthly fees, no constraints, just trade, get funded, that simple. So check it out. You want to learn more about it. You really want to take your trading to the next level and become a money manager, not just a sit-at-home trader. Go to scandinavianmarkets.com/get-funded. And also, there is the Traders Expo in Las Vegas next week, and I'm going to be there. I'm not going to be speaking or anything, but I am going. So if you're there, stop, say hi. I'll be around. I'll be walking around talking to folks and just enjoying Vegas. And I'll actually be there. Happen to be there during my 40th birthday. That'll be fun. All right. So yeah, if you're there, say hi and let's chat and talk markets, talk a little shop. Okay, that's it. Again, Jamie Saettele here, signing off for SB Trade Desk and Scandinavian Capital Markets. And have a great weekend. All right, bye.